Let's get some trader reaction now, coming from Michelle Schneider, Director of Trading Education and Research at Market Gauge. That Fed meeting is getting underway. What are traders expecting?
Well, right now, I think they're still expecting a pretty dovish stance by the Fed. There has been some concerns or anticipation of possibly them going to negative rates, although they have said that they don't want to do that. So I would expect that with the stimulus that's supposedly coming out from the Republican Party, with more money going to people, $1,200, and then supporting other businesses, the Fed will probably say that they've got the tools, they'll use the tools, but right now they're going to keep the status quo. That's what I would expect.
What do you think about the civil unrest that's happening and the market?
And it's amazing that the market has so far not really reacted to that, and yet it keeps growing. And of course, we have a military presence coming in now, which is something that we have not seen in the United States since the Revolutionary War. So it is something to keep an eye on. It's a very serious concern that I have, especially as we get closer to the election. And the unrest, which has started out with racial and social injustice, is turning more towards the economic inequality, which of course is a fact that has happened and has been sort of met with complacency from the public until recently. And so I think that once it starts disrupting things in a way that's different than pandemic, but nonetheless significantly, we might see the market get nervous about that.
How about Facebook moving its earnings date this week? Will that have any implications on the stock?
Well, they were originally going to report on Wednesday, so now they're reporting Thursday. So that's not that bad. And it mainly is because the Congress was meant to speak starting today about the antitrust rules. And because of John Lewis passing and they're having a whole tribute to him, they postponed it.
So what are you doing with Facebook shares?
Well, right now the stock is high. I mean, all of these big stocks, these FANG stocks, have made huge moves this year. And so profit taking makes sense. It's under the 50-day moving average itself right now, Facebook. I would certainly, I'm not a person that really likes to buy or sell into earnings. It's one thing if I'm already in a position and I have a cushion. They're expecting about a 7.1% implied volatility, which basically means that they're looking for a move about $20 to $25 one way or another, which is not that big for Facebook. I would let the dust settle. If it can recapture the 50-day moving average, then perhaps you would have a reasonable risk at that point to see if it can go back up. But most likely I would stay away from Facebook right now. And the whole market could be actually a little bit overplayed because with all the stimulus talk, it's not really doing that much today, in the last couple of days. It's held up to its credit, but I'm starting to feel a little bit more vulnerable here, given especially what's going on with gold and silver.
Thank you, Michelle. We wish you a great rest of your week. Thanks again.
Thank you so much for having me.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.